Hello and welcome to our regular Boom, Doom and Zoom show. I'm Paul Rickard. An apology up front from Peter Switzer, who's been unavoidably detained. But joining me today is my colleague, John Riley. John, welcome to your inaugural Boom, Doom and Zoom.
Thank you very much. You're stepping into the enormous shoes that Peter have stepped aside and left today. So hopefully we can do him proud.
Hopefully we can. Now, I won't be here next week, so I know Peter might have you back again. So we'll see how you go. And of course, just again, the opening caveat here. First of all, we keep this to exactly 30 minutes. Secondly, we should always start with our general advice warning, and that is to say we don't know anything about your individual circumstances, particular need or investment objectives. So while we hope to impart some brilliant ideas and some brilliant insights, it may not be suitable for you. So the appropriate general advice warning, it is general, and if any doubt, you should consult the appropriate investment professional. Okay, so let's move on and go into questions. Two ways here. You can either, can I show that screen going up on the screen, my colleague John? Yep, the screen, yep. Okay, you can click on the bottom of the screen and you can talk to us, or alternatively, you can send the question in. Okay, got some questions just come in, but I've got one that came in earlier this morning that I just thought I'd cover up front. It's a question from Ian about CIMIC. They reported yesterday, and he says, given their annual report, is this a good time to dump them or become bullish and use this as a buying opportunity? We've got CIMIC up on the screen. They've had a bit of, down about almost 15% since the announcement.
That's it, Paul. I think that analysts had some concerns over some of the tidy up in their Middle East operations, and also that had to tie up with the Thiess sale. Mm-hmm. And also I think that just generally looking at the workflow going into the next year, obviously the effects of the COVID pandemic and what that has meant in terms of that workflow. So there's some negativity there. And as we've seen, as you say, the share price, we've seen that react poorly in the last sort of 24 hours since the announcement. But again, to the question at hand, again, it may be one of those times where first to be second, if you would, wait a little bit. But given the pullback, analysts, again, just generally have a neutral view at this point in time.
Okay. Yeah, look, I'm a CIMIC shareholder. I always get very wary about CIMIC because it's about 75% owned by the Spanish. And so you're a minority shareholder. They'll do whatever they want to the group. Yes. Your interest is second. So that's a caution about buying CIMIC. Look, on metrics, they're not expensive, but I think what you tend to see when earning companies report is that if they report badly and the market sells off, that continues for some time.
That's it. The market will be looking for further information to validate the change.
And given the analyst tone, which is all pretty negative, I don't think you're going to see anyone rush into CIMIC in the short term. So that probably means more weakness. Do you sell? I don't know. You might have seen most of it. I think if you were buying, I'd probably hold off for a little while.
Yes, I think it'd be worthwhile just waiting a little while further.
Okay. All right, let's move on to Carlos, a question about Macquarie. They did a quarterly report. What do you think about Macquarie? Is it too pricey at these levels? Yeah, well, it's back towards its highs, isn't it?
Absolutely.
It has been an underperformer the last couple of months.
It has. I suppose.
A relative underperformer.
True. But I suppose when you look back, just from a price relativity standpoint, 12 months ago, it's in advance of where it was at that point in time. So again, you would have to suggest it is at the higher end of its trading range over that period.
Yeah, I mean, I think Macquarie was a pretty good quarterly update. Yes. It's not a sell. There's some currency impacts as Macquarie, and because about 60% of revenue is now offshore, and I think that's probably why it hasn't done much in January. It's really got caught in the currency stock sort of slot, and that's going to be a negative. So you've got headwinds on the currency, but look, I don't know I'd rush and buy it now, but I think it's a portfolio stock. It's a stock you buy in weakness and dips, and you hang on. And I wouldn't be taking profits on Macquarie.
No, I think, as you say, the report was quite a strong report, and going forward, I think that it's a matter of just observing and then just take some profits appropriately at the right time. But I think there's more to go at this point.
Okay, let's go on to a question from Telstra result from Shabir. So I'll do that this morning. Look, the reason the price is up with Telstra is because a lot more confidence from management about
Yes.
They're talking about that the NBN headwinds are starting to decrease. They're talking about, things like that they're actually doing better on costs. They actually didn't need to do this. They actually told us the dividend's going to be 16 cents for the whole year. They didn't actually.
That was interesting that they did confirm.
Yep, they didn't actually need to say that. So that boards don't do that unless they're a bit more confident. So what the market is taking out of the Telstra result, and I might write about this for Monday, is a lot more confidence about going forward. So
Absolutely.
On the face of it, the numbers don't mean much. It's a better outlook. Not a better outlook, but maybe Telstra might be turning the corner, question mark, right?
But as you say, it was reassuring to see such strong comments from the management team in doing the report, which, again, we've been waiting for.
Yeah, okay. Let's go to a question from Peter. We'll go live to Peter. So we're going to unmute you, Peter, if you want to go ahead.
Yeah, I bought ARB many years ago at under $3, but they've really gone up recently. I'm just wondering how you see the value up. I'm considering because it's about 12% of my portfolio now.
Well, congratulations.
Exactly.
I guess they weren't 12% where they started.
No.
Look, all these companies, you couldn't have said the circumstances have been any better the last 6 months with COVID and everyone wanting to go off road and all those sort of things. And
Absolutely,
we can't travel. That doesn't show any signs of turning around in the short term.
Certainly not, particularly with international travel under a prolonged hiatus, if you would.
So I guess I probably would hang on. I mean, maybe just put a little bit of profit away if you're worried. I mean, the two axioms in markets are, you never go wrong taking a profit, and the other one is let your profits run. And I've tend to found that let your profit runs tend to be the best one to follow. And so why would you sell? I don't see any reason why. I think all the so-called consumer discretionary stocks are going to do a lot better. That's why I've been suggesting people stick with that. I mean, this is the big impact of the pandemic. There's so much money going into the local economy in things like cars, four-wheel drives, buying goods at JB Hi-Fi.
Exactly, the white goods have been sensational.
White goods, picking up stuff at Bunnings, whatever it is, that's where the money's going.
Probably the only thing I'd add to that, Paul, is just in terms from a portfolio perspective, again, just given that ARB counts for such a large proportion of your portfolio, and again, this is something you have to look at it individually, is just look to potentially start to rebalance your portfolio selectively and reallocate those funds just so that you're not so reliant upon the performance of ARB, as good as it's been.
It's a big exposure of a very small company, so, notwithstanding its increase in price. So congratulations done there. Okay. Let's go to a question from Michael about Northern Star. They reported yesterday, I think, this is a bit hazy.
That's
Northern Star.
Northern Star yesterday.
I mean, the first question with Northern Star, all this is, do you want to be in gold? That's question number one.
So it's a Pandora's box, doesn't it?
It's a Pandora's box. Look, I just don't think, for me, gold sort of found a home.
That's it. I think when we your last Zoom doom and gloom with Peter, there was talk about a question along those lines of where you saw gold. I mean, there's commentators out of the US sort of talking as high as sort of $2,400 an ounce. Again, you sort of go back through time. It does seem to find a level around that $1,800 to $1,900 mark. So in terms of what that does for Northern Star, again, at these levels.
Yeah, I'm no gold bull, and it's not on my radar. So it was quite a good report. I mean, Northern Star, if I had to play gold through a miner, it'd be either that or Newcrest.
Yes.
But it's quite a good report. But I think that chart tells you it's not really doing much. The other thing you've got with gold, of course, is as we keep saying here, we think the Aussie dollar is going up.
That's right.
And that's a negative for the gold price in US dollar terms can also go up, but that's a negative for Australian gold miners. So, just bear that in mind. Okay, let's get another question here. I think I've just answered this question this is from about the Dejoir share purchase plan. I think I've answered that in today's Switzer report. So I'm going to just suggest you have a look there. And I think I might have sent you the answer just a few minutes ago, which is probably, it's a little bit too remote. So DJW, it's a 5% discount to effectively whatever the market price is going to be in the last week. This is now an underperformer, Dejoir. It used to be a really good lick. It's been performed pretty badly over the last year and a half or longer. And I think you're probably at a 5%, at least a 5% discount to NTA. It probably makes some sense. Okay, we'll get to dismiss that one. Okay, so a question here with anonymous attendee. Thanks, anonymous. Do Zip and Sezzle will have more to go? I mean, Zip's gone through the roof again this morning. The buy now, pay later. I have been so wrong on this sector. I loathe the comment.
Absolutely. I think, Paul, there's a lot of similarities, and of those that are old enough will remember, obviously, the tech boom through the late 90s, 2000s. A lot of similarities that, again, a lot of it is momentum, notwithstanding the opportunity these companies have to succeed with their products and services. But again, is it ahead of the market? I'd have to say so.
I mean, I think the Zip business and the quad pay business in the US is good stuff, right? And I think Zip is a pretty well-run company. I mean, I don't think changing their chair is really a big issue. Zip's most recent run-up has been partly by, talking about a US listing. It was undervalued. It was a non-performer compared to Afterpay. I think people probably say Afterpay is way too expensive. I'm just worried about the whole sector. These things won't go forever. This is not the exposure these guys have got is not that. I never thought it was about regulation, but just the margins they're charging the merchant around 4, 5, 6%. That eventually will get competed out. It's not going to stay that sort of margin. So I think people can talk about growth and customers and usage, but what they're missing is the risk around the margin. So, but I've been wrong on this sector, so I'm not going to go any further. Okay, let's go to a question from one of our regulars, Craig. We're going to go to your call.
Yeah, g'day guys. I'd just like to get your thoughts on Aristocrat Leisure. Do you feel it's a buy around this price, and where do you see it sort of heading towards? Thanks a lot.
Look, it's in all our portfolios. I don't know quite why it's just gone up a little bit in the last couple of weeks. I don't think there's been any news. I think it's a pretty good base around 30. I don't think the analysts have been any new analyst recommendations, changes.
No, nothing I can have a look at here quickly, Paul. Again, it's the view hasn't really changed in that regard. We're looking at a sort of an uplift of potentially sort of 5%. So to your question, Craig, it's again reasonably priced at this point in time. To give analysts are sort of seeing it upwards of sort of $35.
Yeah, I mean, I guess I wouldn't be buying at these levels.
Yes.
I mean, it's also got the currency impact here. So I think it's just got caught up in the general market momentum. I think, background, this is only finessing, around about $30 is probably about the price to look at it.
That's it.
But I wouldn't be buying at these levels. I mean, that's a pretty good chart. It's a well-run company. A lot of, some investors don't like the industry. So, it does get into some ESG type concerns.
Yes.
And that's fair enough. But, it's a well-run company. The problem is it is pretty much exposed to very currency dependent, and that's a headwind for the company. So, back in its Australian dollar share price. Okay, let's move on to a question from about CAN, C-A-N, can.ax. Yeah, I was looking at that. I'm not sure I can answer that question.
No,
it's gone through the roof this morning or the last couple of days. We might have to take that on notice. The question is, we'd like to answer the question live. Can we just go to they said they wanted, this is Kathy. Can we go to Kathy? No. What are your thoughts about CAN? Okay, I'm going to have to take that on notice. I just don't know enough about that company and why it's suddenly gone up. So we'll come back to
cannabis.
That. Sorry?
It's medical grade cannabis.
Yeah, I mean, all the cannabis stocks, we're following what's going on in the US.
Yes.
I don't get too carried away about this. If you go back over, I mean, we've had plethora of stuff on cannabis, medicinal cannabis stocks. If you want to search those through our site, they get hot and cold. If we looked at that stock, I reckon over 5 years, you'll find it's been a lot higher. Let me just go back and see how it's going. I thought I recognised the code.
Yes.
Yeah. So, you know, we're just following on the US trend. There's a bit of talk about some of the states changing. Don't get fooled with the same sucker here, right? There's lots of people promote this stuff. There's more people. It's probably in some ways worse than the lithium sector, right? I reckon there are more promoters out there of these sort of companies. Yeah, they're all going to save the world and the rest of it, but they're believers, and I'm an investor, not necessarily a believer. So
Yes.
I knew an Ian's code when I said, and I just look at the chart. So you can see it was $3 back in 2018 or $4. So just be a little wary, right? These things come in and out of fashion a little bit, and just because it's happening in the US doesn't mean that it'll last more than a day or two in Australia, right?
Exactly.
Okay. All right. Woodside, we're going to have a question from Martin. So hello, Paul. I know you've discussed Woodside in the past. Just after your opinion, 3 to 12 months projections are longer term, also the prospects after the dividend. Well, we're going to get Woodside reporting this month. I just don't know what date.
Yeah, I'll just have a quick look and see if I can see that coming up, Paul. Must be at the back end of the month, I think.
I think it's towards the back end. I mean, one of the positives for Woodside is that the spot LNG price has gone up quite a bit.
Yes.
Look, I think Woodside is, I like to play energy rather from a reasonably neutral position. Woodside's one of my core energy stocks, just to go with the flow. The oil price up near $60 is higher than I thought it would get to.
Particularly in the near term. Analysts have got an outlook of around $27.50.
Yeah.
So about 8% higher than where it's currently.
I don't think it's a screaming buy at the moment. And I just with 2 weeks out or a week and a half from reporting season, I think we just should need to hold on that one a little bit. Okay. So I don't zip it. 2 small companies. Let me see what else we've got here. Got a question here from HE. Gents, with the mining companies going well and the infrastructure projects in place, why are the large engineering service companies like Monadelphous and NWH not moving in sync? Well, that's a good question.
I think probably part will be just a lag from when, particularly with the mining companies, if it's a greenfield site and they go and complete the feasibility study, allocate capital, there'll be a lag until when contracts are let. So you could find that could be anywhere from 6 to 12 months post the announcement of the actual development of the site. I'd suggest that may in some way contribute to that lag that you're experiencing.
That's a really good question. I mean, just look at NWH if we can as well. I guess one of the other things, and maybe there's some upsides here, this is NRW Holdings, maybe there's some upsides here coming in the reporting season. So you might have been spotted something interesting here. Let's move a little bit. They do have, one thing you shouldn't forget is that a lot of them have long-term contracts. They also have, taking quite a lot of extra COVID costs. Like it's quite expensive to be maintaining. They provide in many cases the workforce for some of these sites and different things. And, the whole FIFO fly in, fly out with COVID-19 is pretty expensive. So maybe their costs, sometimes just markets are slow to respond. And, generally the commodity prices need to move first, and then you get the mining companies, and then you get the mining service companies. And I don't know whether it's a 6 months or 12 month or 18 month lag from one to the other, but sometimes the market's just too slow to move on this. So
one of the things I just added to that, Paul, with equipment prices at the moment, and also the lead times for capital equipment, whether it be your dozers and your trucks that all mines need, drifting out now from anywhere to 6 and 12 months. That itself can have a corresponding impact on those sites getting underway.
Okay, question here from Sharon on thoughts on the CBA result. Which is your preferred bank at this time? Still the big 40, like the regionals? Sharon, CBA result, pretty good. Only thing, and you can read a brilliant piece about this in that Switzer Daily today.
Oh, did you write that, did you, Paul?
Yeah, I just wrote that. Look, they didn't do the off-market buyback. It'll happen. It'll happen sometime this year. but it didn't happen. That's why it came off a bit yesterday. It's bounced back a day. CBA is expensive. I think there's still better buying in the others.
Would you look at the likes of Westpac?
Probably look at the likes of Westpac for long term. I think Westpac has still got some challenges, and we've got to see management really prove that they're up to the task. But I probably would look at Westpac if you were looking for growth.
That's more a rotational.
More rotation. I mean, Commonwealth Bank won't go down much because the off-market buyback's going to hold it.
And as you say, it's not a question of if, it's more when they'll announce
It's not a question of if. It will be announced this year with a capital ratio of 12.6 going to 13% when some divestments complete. They've got more than, well, they said that they've got over $10 billion worth of surplus capital above APRA. So they've got $4 to $5 billion at least to give back to shareholders.
That's right. And the dividend at $1.50?
Yeah, look, that was more than the market, not as much as I was suggesting. I think I said 160, but it means the next dividend should be around 180, maybe 190. It also gives confidence to the other three major banks to pay higher dividends.
Yes.
Also, you asked a question about regionals. I can't get excited about regionals yet, though maybe there's better value, but I just don't think that they're winning the game out there.
No, I think that it's only incremental growth that they can achieve relative to the big four. So I'd concur with your thoughts there, Paul.
Okay. Outlook, this is from Sandro. An outlook for Galaxy, of course, on the lithium side. Is it a hold to allow further recovery? Yeah, I wouldn't be selling my Galaxy. I mean, I think the upside on this is still positive. The question is whether all these lithium stocks got ahead of themselves again.
Well, that's it.
And, whether you want to buy it, you can see just whether the support level is more back, and I think some of the technicians would have a view on this is more back towards the $2 level. What would you do on that, John?
Yeah, so I think so, Paul. I think whether it's the likes of Galaxy, Pilbara Resources, a number of them have sort of probably run ahead. The returns in the near term, when you look back over where they were even 6 months ago, let alone 12 months ago, and again, just the challenges, albeit we're starting to see improvement in the lithium prices and also the demand. Again, I think that the share price has led where they really need to be at this point in time.
Okay. Question from Sharon about the pending results from the iron ore companies, BHP, Rio and Fortescue. Do you think we'll see special dividends or buybacks? But we're certainly going to get a big dividend from each of them. Whether it's going to be it'll be ordinary or special, I'm not sure. I don't think buybacks are on the agenda. Because I think they've actually done enough on the capital side, and I think they would rather they might be saying, look, this is we can't guarantee the iron ore staying where it is, and we'll give you a special dividend, but don't expect it. But what do you think?
At $156 a tonne, I think it's, again, the iron ore companies are really benefiting for that at this point in time. Probably one of the age-old question marks with miners generally is when you have such surplus funds is that they don't go and acquire something and find that they pay too much for it, and then they end up continuing to pay for it for many years into the future. So here again, I think just prudent management, and whether it is, as Paul sort of alluded to, a special dividend potentially, but they will have surplus funds to be able to do either or.
Yeah. Well, I guess the other thing there is that there's also a bit of a lag between the spot price and what they're going to realise. So their realised price for the half year is going to be a lot less than 150. Yes. It'll be below 100.
Yes.
So that all bodes well for this current half, but you won't see it quite so much. So, I mean, I think look, there'll be a big return to shareholders. My guess would just be dividend, but they may put it as a special just to so that they can hose down ongoing expectations.
As you say, Paul, they may hold a little in reserve because with Vale anticipated to start to get back on track in the next sort of 6 months, that could well then mean that that market becomes a little bit more challenging.
Okay, question here. What are your thoughts about Genworth? I've never really wanted to own Genworth. It did report well. It's mortgage insurance. I remember last being asked about this when it was about $3 and said, not for me, thanks, because it's, you just had to need one of the big banks. I think Westpac became a self-insurer. I I reckon if I was in Genworth on that, I'd be a seller. And I wouldn't be a buyer. I know it's a fairly attractive dividend, but I just think the industry it's in, I just don't think...
There's a lot of challenges.
There's a lot of challenges, and is it less reason? So I think there's risks here that just banks just take more and more of themselves here.
That's it. I think, as you say, Paul, there's an opportunity there. It's if you're going to book a profit, reallocate those funds to the likes of a CBA or a Westpac or the Big Four.
Okay. So that's just more a question about the overall outlook. Okay. Got a question here from, this is Craig again. Another Craig? Yep. Craig, do you want to go ahead?
Yeah. AD8, Ordinate.
Yep.
Your thoughts?
We've had a lot of fans of Ordinate. I just can't think who the Michael Wayne was it, or I think one of Michael's key stocks. I don't know whether they have reported or are due to report. I don't have that on my schedule. So why can't we get 88? I mean, I think it's a pretty good company. I just don't know what it's done in the last week or two, and we're struggling to get the chart up. So it's not available. So, okay.
Analysts is indicating it's priced at these levels at sort of $8.33. That's the sort of 12-month consensus target. So again, it's at a slight premium at this point in time.
Okay. Sorry, Craig. I think I'm a little bit loath to talk that through until I think it is in reporting season. You might correct me, Craig, but I sort of see that come through with the report. Okay. Question here about Challenger and Virgin Money. This is from Tony. Look, I'm not sure why Challenger went for such a run up, and I'm not sure why it went for such a run down. I mean, a couple of our very active customers have been very keen on Challenger the last few months, and they've been right. I think it reported pretty much as expected. It just, though it's gone for this huge run up since October. I just find Challenger difficult to understand. And
it's been like that for many years.
Right? And you know, I don't know whether it's moving buying a bank's a great idea. I mean, obviously lower interest rates, annuities are pretty unattractive. There's big fees, been impacted by the Royal Commission about how they distribute. I don't know, I think that run up was a little untoward, and I think all we've seen was a correction in that run up.
That's it.
Let's go for the analyst. We've got the analyst and Challenger.
Let's have a quick look for... Just having a look. Analysts here, that analysts are looking around about $6.70. So again, within about 4% of where we're currently trading.
Okay, nothing for me for Challenger. Okay, Virgin Money. Look, again, I caution, why do you want to hold Virgin Money? It's you only have it because of the result of the NAB demerger.
Yeah.
It's a third-tier UK bank. If you want to have a UK bank, it's terrific. It just happens to be listed on the ASX. It's history. It has actually done better recently, but you know, if you look at that historically, that stock originally was at $4. That's what the demerger was.
Demerger, yes.
It's been a dog, and maybe I would say I don't remember it getting to 6, but it did according to that. But maybe this is a chance to look to exit. I just don't think you need to hold that. It's just accident that you hold it. So that would be my question on Challenger.
And analysts see it the same way, Paul. They see a downside or up to sort of 13%.
Okay, last question here from I think we haven't done on AWC from Robert. Alumina, that's a hard company because it really just owns the part of the AWAC business. Aluminium price is up. I don't know. I got rid of my Alumina shares decades ago at about this same price, and I guess I still have the same bias against the company. I think it's a pretty attractive dividend from memory.
Just per share, looking around about 6 cents.
Yeah. Look, I find alumina is, of all one of the commodities, pretty hard to say. So I'm just not sure I'm there on the...
What I would say, Paul, is analysts do see further upside. Analysts are looking around about $1.98, $2. So there is some sentiment there from the likes of UBS, Citibank, Macquarie, and they see some upside there.
Can we just, before we go, John, just show that over 5 years? Is it possible? Just to see what it's done over 5 years. Yeah. Yeah, you've got to be bull on alumina. I find that a very hard commodity to get a handle on. So
There's
my
probably
caution-
lower hanging fruit elsewhere.
There's lower hanging fruit. Okay. Thanks, John. That's all we've got time for. It's just after 12:30. We keep this to half an hour, our regular Boom, Doom and Zoom webinar.
Been a pleasure.
You'll be back, I think,
Well, I might
for
be.
next Thursday. I won't. But until then, we'll see you shortly. And happy investing. Good afternoon from the Switzer team.
Thank you.